Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. Let me start with the news that's been flashing across my screen. It started with a tweet from Mine for Nothing. Source: Queen may shut down UK Parliament today. Then the BBC's Nick Robinson, hearing that the Queen could be asked to agree to prorogue Parliament as early as today. She's in Balmoral. Would be done by order in council. Only one source, not confirmed. Watch this space. Sterling, which was climbed as high as 123 yesterday, is currently at 121.73, having fallen more than a big figure. I take you back to my article on the 5th of August when I asked: Boris Johnson has elected to take quite properly and impossible is nothing and can do political posture. But I asked, the bottom line is, can you swing it? I quoted the Telegraph's Daniel J. Hannan: Boris isn't bluffing, every action, every appointment, every word since he entered number 10 signals the same thing. Britain is leaving the EU on October the 31st. And I ended, this was on the 5th of August, by asking, the key question is this: can Prime Minister Boris Johnson self-eject Britain? Can he be stopped? And I said, this is a political calculation. Matthew D. Ancona, in a tweet stream, answered these questions. Here's where we are. Johnson's authority, he said, is made of balsa. I disagree. He depends upon the taxpayer-purchased votes of the DUP and the support of his own parliamentary party, many of whom want much more than the backstop excised from May's deal. Only in office at all because of the decision taken by the tiny selectorate of Tory members. We know that. This is the point I was making. Impossible is nothing. By adopting the kinetic energy of a campaign rather than the governing ethos of a serious administration, by colonising the centre of Whitehall with the 2016 Vote Leave team, he has achieved momentum and focus. Indeed he has. The entire apparatus, this is Matthew D. Ancona, of the British state is now being deployed in the service of a single goal: the implementation of a single interpretation of the 2016 referendum. More than willing to pay the price of no deal as long as we leave on October 31st, do or die. So absolute is this focus that the PM thinks nothing of threatening Parliament with prorogation, which he seems to have done already. Which begs the question, will Parliament? All normal conventions and norms are out of the window. This is total political warfare now. Johnson and Cummings will go to any lengths to get the UK out on October the 31st. So, across London, as the political and media class returns in batches from holiday, you can hear a feeble murmuring sound. It is the establishment wondering if the PM means it. Yes, he does. And longing quietly for a good old-fashioned British fudge. They're not getting that. So, very, very fast-moving developments. I think essentially he's railroading it right through. Impossible is nothing. Do you remember that rock from yesterday? And I think cable, therefore, is going below 120. There's a bull market in safe haven assets, tweeted Hayek and Keynes. Indeed there is, and I've been speaking about that. I said we're priced for Armageddon and that kind of thing. I said safe havens, which were already in nosebleed territory, and indeed we remain right there. Gold, yen, Swiss franc, sovereign bonds, priced for Armageddon or an apocalypse now. Bill Dudley has written in Bloomberg, the Federal Reserve shouldn't enable Donald Trump, and this has got a lot of it's created a lot of excitement. Let me just give you the pertinent points. Trump's trade war with China keeps undermining the confidence of businesses and consumers, worsening the economic outlook. Manufactured disaster in the making presents the Federal Reserve with a dilemma. Should it mitigate the damage by providing offsetting stimulus or refuse to play along? What if the Fed's accommodation encourages the president to escalate the trade war further, increasing the risk of a recession? Central banks' efforts to cushion the blow might not be merely ineffectual, they might actually make matters worse. Monetary policy cannot provide a settled rule book for international trade. That was Powell. I understand and support the Fed officials' desire to remain apolitical, but Trump's ongoing attacks on Powell and on the institution have made that untenable. Central bank officials face a choice: enable the Trump administration to continue down a disastrous path of trade war escalation, or send a clear signal that if the administration does so, the president, not the Fed, will bear the risks, including the risk of losing the next election. 26th of August, Trump called the Federal Reserve Chairman Powell an enemy bigger than Z. 15th of July, I said it's a quite incredible moment in monetary policy making where the markets and Trump have led policymakers by the nose into a situation of voodoo economics, plain and simple. I said Trump has been bashing the Federal Reserve Chairman and at least did not summarily dismiss him like Recep Tayyip Erdogan summarily dismissed his central bank chief. And then I concluded by saying the populists are now in charge, central bankers are doing the bidding of their leaders, and Erdoganomics might well be the precursor for where all this ends up. 15th of July, stoking up the fire with rate cuts is a very dangerous situation because according to my calculations, the Fed will need to be raising rates into the election, something that will turn Trump apoplectic, I'm sure. Specifically with respect to the United States, stoking up the fire is a very dangerous situation. It is a Wizard of Oz world, as I said on the 24th of June. This is voodoo economics. The 30-year US Treasury yield closed below 2% for the first time ever. J.S. Blockland. From the 2-year to the 30-year, the Treasury yield is now below 2%. David Inglis. 3rd of June, bond yields in tilt mode. They tilted further, as I said they might. And then let's move on to another piece I wrote, which was about the feedback loop phenomenon. And I said the most important currency to watch right now is the renminbi. Where is this renminbi right now? 7.17 and change. So we're soft again, notwithstanding that onshore halted a 9-day losing streak after a stronger than expected fix. And essentially, via the renminbi, this is the point I was making, Xi Jinping has signaled he has control of the console. The specialist is monitoring data on his mission console when a voice breaks in, a voice that carried with it a strange and unspecifiable poignancy. He checks in with his flight dynamics and conceptual paradigm officers at Colorado Command. We have a deviate tomahawk. We copy. There's a voice. We have gross oscillation here. There's some interference. I've gone redundant, but I'm not sure it's helping. We're clearing an outframe to locate source. Thank you, Colorado. It's probably just selective noise. You are negative red on the step function quad. It was a voice, I told them. We have just received an affirm on selective noise. We will correct Tomahawk in the meantime, advise you to stay redundant. The voice, in contrast to Colorado's metallic pigeon, is a melange of repartee, laughter, and song with a quality of purest, sweetest sadness. Somehow, we're picking up signals from radio programs of 40, 50, 60 years ago. And I said, what is clear, this is after the currency moved through 7, is that Xi Jinping has repelled the US advance. And this past week, the last 2 weeks, renminbi price action was a message delivered with finesse and subtlety, and whose import cannot be ignored. The point is this: the renminbi is now the catalyst, and China has signaled it will be a shock absorber. Xi Jinping has also signaled he has control of the console. And then I went into the feedback loop phenomenon. Party like it's 1998, analog coming down the wire this week from stock board asset. Home thoughts: who is stiff and inflexible is a disciple of death. Whoever is soft and yielding is a disciple of life. Lao Tzu. And that comes from water is fluid, soft and yielding, but water will wear away rock, which is rigid and cannot yield. As a rule, whatever is fluid, soft and yielding will overcome whatever is rigid and hard. This is another paradox. What is soft is strong. Men are born soft and supple, dead they are stiff and hard. Plants are tender and pliant, dead they are brittle and dry. Thus, whoever is stiff and inflexible is a disciple of death. Whoever is soft and yielding is a disciple of life. The hard and stiff will be broken, the soft and supple will prevail. I got into some disco of late. Love Unlimited Orchestra, Love's Theme from 1973. Fantastic. Ours is the most cryptic of centuries, its true nature, a dark secret. Salman Rushdie. Meaning is a shaky edifice we build out of scraps, dogmas, childhood injuries, newspaper articles, chance remarks, old films, small victories, people hated, people loved. Perhaps it is because of our sense of what is the case is constructed from such inadequate materials that we defend it so fiercely even to death. Imaginary homelands. Perhaps the story you finish is never the one you began. Fundamentalism isn't about religion, it's about power. Salman Rushdie. Political reflections: Israel appears to attack 4 countries in 2 days, bombing Iran's allies across the Middle East. This is from Newsweek. Reportedly struck targets in 4 different countries within the span of 2 days as it broadened the scope of its extraterritorial activities against allies of Iran. Netanyahu: we will deepen our roots and strike at our enemies. So Gaza, Lebanon and Iraq, and I'm not sure what the other one was, on Syria. On Sunday, Hezbollah Secretary General Hassan Nasrallah announced 2 explosive-laden Israeli drones had fallen over southern Beirut as they attempted to conduct a suicide mission in a part of the city his group enjoys support. And this took me back to something I wrote a while ago in 2013 when I said neither Riyadh nor Tel Aviv are aligned with President Obama's, now you can read President Trump's, Iranian rapprochement. In that article I said if the Pax Americana in the Middle East were a 3-legged stool with the US the most important leg, then Israel and Saudi Arabia are the other 2 legs of that stool. As I've said previously when I was writing about the frontier and it being the periphery, being a tinderbox, and I said it is not possible to Xinjiang, Hong Kong, I think, This is from Birdie Word, confidence in one country, two systems. The Amazon in flames, the view from the ground. The Amazon biome accounted for 52% of Brazil's fire reports this year, with more than 40,000 outbreaks since January. And as I said in November 2015, we are like frogs in boiling water. We have created massive interference in the cosmic fine-tuning phenomenon. Last season alone, almost 2 million acres, an area bigger than Shanghai, were cleared from the world's largest rainforest. Soybean acreage in the Amazon is up more than fourfold in the past 12 years, representing 13% of Brazil's total soy area. Almost all of the increase is from pastures that have been converted to farmland. A source close to Deutsche Bank says Trump's tax returns shows he pays very little income tax, and more importantly, that his loans have Russian co-signers. August 2017, I said any financial expert will tell you that President Trump's financial affairs are a smoking gun. I said Deutsche Bank loans were surely mirror transactions where Deutsche Bank was a commission agent interposed between Trump and the real lender. International markets, who would have ever thought we would reach the stage that tweet risk would actually be a thing? Currency markets, well, 110.90 euro dollar index back above 98 at 98.074. Japanese yen 105.76. Swiss franc 0.9821. The pound all over the place, trying to claw back now, 121.91. The Australian dollar 0.6744. India rupee 71.7055, South Korean won at 12.1330, Brazilian real 4.1265, Egyptian pound 16.55, and the rand 15.30. Americans' view of the current economy is the highest in 19 years. Who would have believed that? US consumer confidence declined in August by less than forecast. Assessment of current conditions climbed to the highest level in almost 19 years, helped by a job market that remains robust. 24th of June, I was saying, such a forecast is absurd. If you were to look at the US economy in isolation, the economy has some soft spots, but unemployment is at multi-decade lows, consumer spending holding up. And I was then saying, we're in nosebleed territory. And this is voodoo economics. And if they cut next month, that's even crazier. And they're going to be hiking into Trump's re-election, which is a Shakespearean level situation. Dollar index, as I said, we are back above 98. I'm expecting us to make further ground. Euro dollar, 110.89, hanging in here. Let's see for how long. My article over the weekend was China strikes back at Trump. Commodity markets, gold, every time you found, I think it can't go any higher, it does. 1540. We're back at the top of the range. The price of silver surged 3% yesterday. Crude oil also on the rebound today, $55.68. Tea commodity thinks coffee is forming an inverse head and shoulders. Upside risks increasing, he says. Emerging markets on the 19th of August, writing about emerging markets, I said emerging and frontier markets look in big trouble this time around. And to wit, the rupee loses its mojo in another ugly August for India's currency. Worst monthly loss in 6 years, JP Morgan warning of further pain ahead. Data due Friday will likely show that GDP slowed in the June quarter to 5.7%, but this is what I found interesting. Rupee's fortunes are also getting linked to the moves in the renminbi, according to JP Morgan. If the renminbi continues to depreciate against the dollar, as we expect, We believe the rupee will depreciate virtually lockstep with the renminbi. Of course, we had another event in the middle of the night when the Turkish lira sold off, and that confirms that in the middle of the night, gremlins and goblins stalked the foreign exchange markets. Sub-Saharan Africa, S&P followed suit, downgraded Zambia's credit rating, now C's all round, reflecting huge debt risks. Debt service costs are growing, FX reserves are depleting, lowered to CCC plus on low foreign reserves, high debt service obligations. There's a high probability, the outlook is stable because we expect the government to meet its commercial debt obligations over the next 12 months. It's a terrible situation. And, it's been like a road wreck coming at us. In Kenya, there's a high probability that there are at least 41 billion barrels of oil and 319 trillion cubic feet of gas yet to be discovered in sub-Saharan Africa. On that note, Total and Eni will transfer a combined 25% interest in blocks L11A, L11B and L12 to Qatar Petroleum. That's Kenya. South African all share up 2.2% year-to-date dollar-rand. It seems to have stabilized for a little bit, but really it is the perfect proxy of that China emerging market, frontier markets feedback loop phenomenon. 1530. I expect it to weaken. Egyptian pound 16.54. Doing extremely well. EGX 30 up 9.57% year-to-date. Nigeria fears fiscal crisis as debts take big pie of revenues. Fiscal revenues undershot targets by at least 45% a year since 2015. At the same time, expenditure doubled. Total borrowing, however, is low, as a proportion of GDP, 21%. At about 7% of GDP, Nigeria has one of the lowest tax collection ratios in the world, however. And that takes you back to, I was writing about the election in February and quoting Cyril Ramaphosa, quoting Ben Okri, "We dream of a new politics that will renew the world under their weary, suspicious gaze. There's always a new way, a better way that's not been tried before." Nigerian all shares down 12.18% year to date. Ghana Stock Exchange down 7.6% year to date. Management told investors it intends to carve out Jumia Pay as a stand-alone entity. I did an interview with the guy who ran the Kenya office, and he really thought there was a lot of value in this Jumia Pay platform. And that takes me back to an article I wrote about the platform economy. Kenya Airways reports first half earnings slump. Total income expanded 12.18%. Operating costs increased 15.476%. Operating loss up 183%. Loss for the period 8.563 billion versus a loss of 4.035 billion the previous year. Cash and cash equivalents at the end of the period 4.229 billion. I would like to point out that in turning around Kenya Airways, a deliberate decision was taken not to shrink the business, but instead improve financial performance through strategic investments on growth opportunities. Michael Joseph. Total revenues increased by 12%. Improved passenger, cargo and other revenue streams. Kenya Airways sinks into negative equity of 16.18 billion shillings. That's from Mir. Every flight you try and get on is full, and their prices are not cheap. NSC reports first half earnings per share slumped 82.692%. Operating income down 18%, total income down 15.37%, admin expenses up 22.38%, EPS down 82.692%, 18% decrease in revenues, mainly driven by a 28% drop in equity turnover, reduction in equity trading levies by 28%, bonds turnover edged up 16%, administrative costs leading to one-off staff restructuring cost of 52 million not expected to recur in the second half. Successful launch of the NSE Next derivatives market, ongoing upgrade of the ATS system will benefit from reduced staff costs as a result of the staff restructuring. Look, they need more volume through the system. They've built the building, but they're not getting the volume, and therefore they've spent money in building the building, and if you don't get the volume, it's a double whammy. Kenya shilling 103.45, Nairobi all share up 5.48% year to date, NSE 20 down 12.37% year to date. Thanks for stopping by.